You can ask people what makes a Bitcoin investment a good one, and you'll likely get different answers depending on the individual, their beliefs, goals, and age. A recent survey conducted by Blockchain Capital indicates that 30% of 18 to 34-year-olds would rather invest $1,000 in Bitcoin than $1,000 in government bonds or stocks. The same study also indicates that 42% of millennials have heard about Bitcoin compared to a 15% awareness among those aged 65 and older. Interested in seeing if you should invest in Bitcoin? Then let's take a closer look at why investing in Bitcoin may be a good idea. A good investment? Deciding what makes an investment a good one is always just one's best guess, even using various methods to determine an asset's worth beforehand. Long-term viability, market cap, business stats, and business models can all be examined and assessed to determine if the opportunity has merit. A simple way to think about Bitcoin as a potential investment is to consider its rise against the US dollar and the fact that there will only ever be 21 million Bitcoins. This means that it can remain valuable or increase in value relative to other currencies that can be printed on a whim. Risk and reward. Volatility is a reality when investing in Bitcoin, and investors can incur a loss because it can put them in a position of having to sell after a drop in price. However, volatility, how much an asset goes up and down in price, is not the only reason for permanent loss and shouldn't be used interchangeably with risk. The more risk, the higher the reward, and risk means more things can happen than will happen. Bitcoin may be volatile, but that in and of itself is not an indication of a market crash. Worth the risk? If one is averse to risk, does that mean that they should invest in Bitcoin at all? No, not at all. It means that if your risk tolerance is not high, you might want to go with a 40% low risk, low reward portfolio. 25% stocks, 25% real estate, and 10% in cryptocurrencies such as Bitcoin. Such diversification would mean that 90% of your money is pretty safe and may, in fact, give you a steady income or returns, but 10% of your portfolio can either result in no returns or more than the other 90% combined. The key is to only invest in Bitcoin what you can afford to lose. If you're young, haven't got a family to support, and have very low expenses, a high-risk strategy could really jumpstart your financial life in a significant way. Bitcoin investment potential. While Bitcoin investing is not for the faint of heart, it does represent a technological breakthrough that has the potential to change the way the world banks. So, one strategy is to just simply buy some Bitcoin and hold it. Not a substantial amount, but a small percentage that could substantially increase in value. Learn about the technology at the very least. If the underlying value is related to the movement of money and creates vast opportunities for investment, you'll be ahead of the herd. After all, diversification is a core principle of a good portfolio. While Bitcoin is one of the riskier new assets for investors, many believe it has tons of growth potential and currently represents a fraction of other financial assets. If this is the next great technological innovation of our lifetime, seizing the opportunity now can accelerate retirement goals before everyone else catches on and prices skyrocket. Want to learn more about cryptocurrency? Then visit our site today. If you enjoyed this video, don't forget to like, comment, and subscribe.